What's going on, family? Hopefully you're doing absolutely wonderful. Let me know if you can hear me loud and clear, if you're able to type down below. So good to see you. Whether I'm blown up on a big screen or you have me on your phone or tablet, laptop, wherever you're tuning in from, I appreciate you so much for being here. We'll get started in 1 minute here. 1 minute. It is a holiday weekend, and some of you maybe have wondered, is he doing it today? It's Sunday. I was heard to refer here, and all those good things. And I want to make sure that we're staying on schedule, even though tomorrow is MLK Day, in which the markets are closed, more specifically for the options market. All right. The actual execution of stocks, all those good things. Loud and clear. We are good to go. All right. 1 minute and counting. We are ready to go, rocking and rolling. Welcome, everybody. It's Stock Sermon Sunday. This is where we do our weekly market analysis here for the YouTube channel, and also in a culmination with Leverage University. Leverage University is our community platform for financial literacy and also live trading, education. All those good things are inside of Leverage University. I do various different things, but in this particular channel, I want to make sure that you have an outlet that you can decide to go to at any time, whether you'd want more support or just be a part of a community where you can have some expression. Right. So those links will be down below, and we've got new additions that will be coming to Leverage University as well, i.e. bringing back our merch line, our different ways that people say, hey, I want to be a part of this. I enjoy this. I've gotten the feedback. I'm trying to get the feedback as much as possible. How can I support it? How can I be a part of the community? If I don't need live trading, if I don't want to trade, but I just like the value that you give here, there are different ways that you can support, which helps me show up here and give as much value as I am. All right. So that's one piece. Another kind of introductory piece that we'll give me bringing new to the platform of Leverage University is going to be our trade ideas, or a smaller version of where someone can say, hey, do you have a place where I can go and get your charting, or maybe a trade idea that I can play out on my own, and maybe some educational tools, kind of like a quote unquote starter package. It's going to be called the apprentice level. All right. So right now we just have main two levels, our analyst and our mentorship. The apprentice is going to be that kind of beginner, or someone that just doesn't have as much time to commit and they just want to just pour into learning as much as possible. Now, I know the YouTube channel seems like it's so much value here as I just keep pumping out videos, but some people do need a little bit extra support there, whether it be trade reviews that are a little bit more organized, a short version of a lot of the 30, 45-minute videos. How can I have little short snippets, right? So need merch, love the merch, need t-shirts, hoodies, hats. I don't have my mug in front of me, but yeah, that was very popular. So now that we've quote unquote rebranded into specifically Leverage University being financial literacy, trading, all those good things, we can focus in and hone in for those that want to support there. All right, cool. There's a little introductory, give time people get their charts up and ready to go. And let's share a quick update. So before I do that, just so you have me on the big screen here versus me and being a little small corner there down to your bottom left or right, give you a kind of summary of what we're going to discuss tonight and give you a sentiment. Okay. So the first thing that we have is a shortened week. Okay. On a shortened week, this is a time for kind of three different ways that you can approach the week. The first way is you can sit and watch and learn. All right. And it seems very easier, kind of easy said and done. But when you have shortened weeks, there is volatility goes up and down very crazy. There's a lot of news events that come in, which we'll talk about. There's earnings season that's approaching. So there's a lot going on that essentially a sentiment is being kind of built up, right? It's like the Super Bowl of the stock market. When earnings season comes around, everyone's preparing, everyone's getting their funds ready, everyone's looking at their portfolio, seeing how they can redistribute their top companies, seeing can it go further, or is it time for me to trim little profits? So this time it happens 4 times, right? So we technically have 4 Super Bowls of the year, and that is earnings season. Okay. So I'll share the screen in just a second to show you what that looks like. All right. So this is a time for step number 1 for you to just sit, watch, learn, and see how the market moves. So great time for that, especially for individuals that are really trying to tap in, but just don't want to just jump right in head first. The second is that we trade, but we trade with lighter size. Okay. Lighter size. And that doesn't mean be scared of going in. And I know I keep saying that to my live trading group and the folks inside of Leverage University officially coming in. And Brian, you keep saying lighter size, lighter size. What does that mean? That means on a shortened week, you have less time for the trade to work out if we're doing our day trading, right? You know how we have a full 5 days. So Tuesday, the market will open more specifically for options trading, in which we primarily trade. We do trade futures as well, which a lot of you have been intrigued about. So definitely we'll talk about that more, but don't want to overwhelm here on the channel. Okay. So we want to make sure that we have enough time for the trade that we're looking at to play out. So that means lower your position size, adding in how we need to, how we're used to, right? Managing your risk is going to be very key, because the next 2 weeks are our money-making weeks, right? Meaning next week is when the big boys come out, the Teslas, the Microsofts, the Alphabets, i.e. Google, right? Amazon will be coming out for their earnings. We have NVIDIA and semiconductors that are towards the end of February. We have Robinhood. We have a lot of big companies that will be presenting on their earnings. So you don't want to kind of mess around this week necessarily if there's not a solid A+ setup. That makes sense? Okay. And then the third different way that you can approach this week is saying, ooh, I want to study the company that I really want to take advantage of for earnings. What do you mean by take advantage of? That means, i.e. trade it. Okay. Post earnings. That means after their earnings reports, that's typically when we trade that specific company. Okay, so going ahead and marking up your favorite companies. I'll show you in just a second what the calendar looks like. If you don't know where when's what company's reporting, I'll show you that. So going ahead and charting up those companies. This is a time for researching, because the Super Bowl of the stock market, i.e. earnings, is when a lot of money is made in people's long-term portfolios. If the company continues higher in your position, long-term shares, and or if you trade properly during earnings season, a lot of money's made, but it takes due diligence because there's a lot of moving parts. All right. So there's our sentiment. And then if you see the title today, Brian, you said tariffs looming. Will it drop the market? We'll talk about that, why I think the market might fall a little bit this week. All right. Cool. That was a mouthful, but I think people like that, giving a little bit of a sentiment of what that looks like. Okay. So this is our Discord. For those that don't know, you kind of always want to, people like, what's inside? What's inside? So this is our platform, kind of our inside of house. All right. So we got our trading floor here, and I do have a crypto section. You can see mine's very organized. So if you, if you're like, Brian, my stuff is all over the place, you have so much going on. Well, these are folders, right? So I always keep the folders clean, right? Closed, and I can just go into what I want. All right. So when I open up the trading floor, all right, I go into, let's go into our economic calendar. All right. So every week, just in case people don't, the benefit, I kind of doing the work for most people because I'm doing it for myself anyways. Next week's calendar. Okay. You can see here that the market is closed tomorrow. Okay. We have nothing on the docket or the calendar for Tuesday. So I consider these kind of free days, FREE. That essentially means that the market will decide to move how it wants to move. Okay. So we'll continue. There's no interruptions, meaning there's no data in the way that can change the direction of the market necessarily, other than potentially mark this on your calendars. On the 20th, we have the decision, i.e. the announcement of the credit card 10% interest rate. Okay. If you didn't know, President Trump has been proposing, and other presidents prior have been trying, and other administrations have been trying to propose that credit card companies, banks lower the interest rate of their credit cards to give a little bit of help, support to the consumer. Okay. Now, why would they do this? Why do they want to do it? Because there's always something in between, right? This benefits the administration and also benefits, quote unquote, the economy. Because think about this. As much as people love, i.e. hate, i.e. don't care about the government, whatever your feeling is, not political statement here. If I'm thinking about it from an administrative standpoint, I'm looking at, well, if I can lower their interest rate, if I can help them out, right? And they've got a little extra money on their card and they've got a little extra money, the uninformed will not pay down the card while the 10% is going on. They will actually go pay more into the markets. They'll go shop more. They'll spend a little bit more out because they know, ooh, I got 10% for a year. I can take advantage of that. Buy that new couch, buy that new thing, right? So it's not that the government, i.e. the administration, is trying to do this thing, but they're trying to stimulate the economy. They're trying to get the consumer to go out and spend more because that stimulates the overall economy, right? If consumers, i.e. us, begin to get stingy and we know too much, then we begin to pull back. That's not good for the overall economy. So think about it from that stance, is that's why ultimately, in my opinion, they want to do that, okay? It helps you for the ones that actually pay down their cards and actually pay down their stuff and utilize the 10%. But guess who it hurts, right? It hurts the banks. The banks make money, i.e. on 20, 25, 30% interest on credit cards, okay? So that's why you see bank stocks pulling back. That's also why the market has been pulling back, because finance, or the financial sector, is a heavy weighted sector in the S&P 500, i.e. SPY. Okay. So as I'm educating on this channel, I want people not to just come in here on Sundays, or if you've been getting the gist that, man, this dude really wants to like actually teach us, right? The overall arching theme of what's going on, not just say, hey, trade this, do this, look at the chart here, trade the levels. Don't worry about anything else that's going on in the economy. All right. Because once you understand the gist of that, you can understand the game they're playing. And when you understand the game that they're playing, then you take advantage of the Super Bowl, right? Now we're on the same quote unquote winning team, i.e. you can take advantage of what they're trying to do and be on the right side of the winning team, right? And not the one being taken advantage of, right? So that is what's going to be happening on Tuesday. So it's going to be, announcement / news article, whatever it is. So in my opinion, if this goes either way, right, I think the market personally is going to react in a quote unquote negative way. Now, if it gets rejected, then the banks are going to be hooray, hooray, hooray. Like everything's good. We don't have to give our clients 10%. Then the bank stocks could go back up. So on Tuesday, maybe keep the JP Morgans, the American Expresses, the Capital Ones, the PNCs, your regional banks, the Bank of America, the Wells Fargo, all of those maybe just on a side watch for Tuesday and this week. All right. Cool. Wednesday, we got pending home sales. Thursday is the big kind of kahuna day. And then Friday, also big. Why are those big? Because we got GDP, gross domestic product, another inflationary data report. We've got personal consumption expenditure report on Thursday as well. PCE, how the consumer, again, talking about the spending of the consumer. Are they spending more? And right now, if you did not know, we had the retail sales report this past week. The retail sales report tells us how retailers have been doing. And what did we just come off of? The holidays. And what did not go astray? People spending money, right? So yet we're in this K-shaped economy and things are getting inflated, but yet everyone's still spending money. And also people are concerned about their jobs. You see the looming kind of disconnection here, right? Some of y'all might be like, yeah. I mean, some people are just like, forget it, whatever. I got to do what I got to do. I got kids, I got family, I got to spend what I got to spend. Right? So there's so much nuance going on that this is how, if you want to know what all this is that I'm analyzing, this is called fundamental analysis. Okay. Fundamental analysis gives us a sentiment of the overall economy with news, earnings, and data reports. Okay. That also gives us a sentiment. So when we get on the charts, we can kind of read the candlesticks of why they're doing what they're doing. So if you've been wondering when we get on the charts, why the market has not been spurring higher, man, well, why are we not breaking new all-time highs? I thought we were like, what's going on? It will eventually do that, but we can't get through there just yet until we have something that stimulates and says, hey, get rid of the looming tariffs that you keep pushing back. Right? So that's why you see, will tariffs drop the market? Is there something looming? If you see this kind of sentiment around, right, then that's the reason why. And it's not maybe even just coming from me. It's maybe coming from cautionary from other content creators / educators in this space are, in my opinion, the people that are speaking truth. That's why you hear that sentiment. All right. In the short term. Okay. So PCE, PMI. Everybody good there? Give me a 5 in the chat, everybody, if this has been good thus far. I know it is quote unquote, not the sexy stuff, as I say, meaning that it's a lot of education that you may have questions about. And that's what I want from everyone on here, especially the new folks that are being brought in, referred, or you just happen to click on here. It's like, okay, I got a lot of questions. This is making sense. I got a lot more questions. I got stack, don't stack, don't stack questions. This is making a lot of sense. Why don't they teach us this in school? I want your brain to be working like that, right? Because that is, in my opinion, the evolution of saying, man, what have I been? You start questioning a lot of different things. And that's what instills growth, in my opinion. All right. Let's go into the earnings calendar here and see what we got on the docket for earnings. You see it stacked. So you see this is Super Bowl time for the stock market and traders in general, because these companies will be giving a sentiment of how their forward guidance, their earnings per share or EPS, and their revenue is doing. So there's 3 prongs to earnings, okay, for each company. So if you're interested in a company, you can look at this chart, screenshot it, stop, whatever, or just go to Earnings Whispers on X/Twitter or type it into Google, right? And they do an awesome job of just going ahead and giving a calendar, okay? So on Tuesday, when the market opens, we will have Netflix. That's the first kickoff. We know that Netflix has been beaten down a little bit, and it's, in my opinion, in a first buy zone underneath $90, okay? So Netflix, very important to pay attention to blue chip, solid companies that know we have a moat, M-O-A-T, right? A moat. And someone asked a question I think a couple weeks ago, like, what's a moat, right? The medieval times, right? They built a castle with a moat around it so you cannot get in and it stands alone, okay? So there are companies out there that have created a moat to say, we don't really have much competition. We are that dog. We are that big dog in that space, okay? And we know, I don't care how much you like Netflix or you have sentiments, take the emotion out of it. Man, they charge too much now, whatever. They won't let me share it with my kids. It doesn't matter. Think big picture like an investor. NFL's coming on Netflix. There's more. Have you noticed more shows that you actually want to watch? More movies maybe that you actually want to watch or come back on Netflix? Netflix had a little lull. This whole Warner Brothers thing, and they're buying Warner Brothers, and I think that's all a fluke, personally. Their balance sheet is absolutely amazing, in my opinion. They have cash flow. They're generating revenue more than ever, each earnings, and they have a little stint where they're pulling back. So that's the kind of company that you want to pay attention to say, remember when Netflix was $80 back in 2022? How many people remember that? When you want to have that again, okay? So pay attention to Netflix, i.e. shares, in my opinion, are a great buy zone to build a position out. And we'll talk about it on the charts. All right. A couple of notable mentions. I'm not going to go through all this because this will take forever. Intel, paying attention to that because all the government funding there. It's also in, obviously, the AI space, also in semiconductors, chips, so on and so forth. A couple other notables here. You can do your research, whatever you want to pay attention to. But I'm just looking at the ones that actually move the market and that we also trade. UNH, okay, on Tuesday morning. Okay, UNH on Tuesday morning, the 27th. We got Microsoft, Tesla, IBM, ASML, right? ServiceNow is also very interesting because it is beaten down. So I'm wondering if that will recover. ServiceNow. UPS has been recovering pretty nicely. Apple, okay? Then we got SoFi. That's going to be a big one that everyone's paying attention to. SoFi, because SoFi has been the hot new fintech company over the past couple of years that people have been dollar cost averaging to, underneath $20, underneath $15, underneath $10. And they're wondering, can this be $100 plus stock, kind of like Robinhood, right? So that's going to be a big one that you want to mark on your list. And then we got AMD, Google, ARM. So you see these weeks are getting really stacked, right? Which is why the market will choose a direction one way or the other as these companies begin to release earnings. Okay. There we go. There's our sentiment. So now that I've got that in my back of my head, I go to SPY and I'm like, okay, that makes sense why SPY is sitting where it's sitting. Okay. That makes a lot of sense why SPY is just sitting where it's sitting. Why SPY into the new year, okay, has been grinding up. And I keep mentioning this. I've been watching the videos. You've heard me say it multiple times. And once it finally plays out, that's when people are like, oh, that's what that looks like. That's what he was talking about, right? We have a big move, lower high, higher high, okay? Then we have a higher low, higher high, higher low. Oops. Did we go higher here to make a higher high? Not yet. So do you see how I stopped right there? That is why I'm looking at this potentially to start trending downwards. Either we gap down or we stay in this chop zone right here. But right here is very interesting, okay? Because we could retest this neckline right there. That's what it's called. Right around that 687, 686. That yellow line is our cautionary line, okay? As long as we're above that 687, we will just consolidate up here, and it's trying to choose, do we go up and break out, or do we come down like this and we shake everybody out? And guess what? All these buyers up here are trapped. What do you mean by trap? That means people are looking for hold this for a big breakout. So if we break down, everyone that's up here has to stop out of their position. And that's what instills a volatile move back to the downside, as you can see somewhere like this. All right. So you see all that consolidation right there. See how it was sitting above there, sitting above there, sitting above there. Where's that neckline / line in the sand? Last time we looked back in October. 665. What happened when we broke 665? Just a flush through there. All right. Does everybody see that? Okay. So why do you say that, Dr. B? Because it is imperative that you put your risk hat on as a trader first, not how much money you're going to make off of a trade. So you've got to have a plan one way or the other. So what do we do if it drops? Okay, well, if it drops and you're a long-term investor, pick up some dips. Not that difficult. You actually want, as a long-term investor, to get big pullbacks. So if you're a dollar cost averager, if you are a person that just has a retirement portfolio or whatever it is, you want it. And there's questions about how far you want it to pull back, but you want 2%, 3% pullbacks. You want 5%. You want a 10% correction, right? You want things go from 687 all the way back to 646. It looks scary, right? But that's what you need for it to go higher. Okay. So if we do get some type of pullback and it breaks trend very drastically, then that's what creates the wealth gap. Let's look back. So savvy investors are actually praying, trap all buyers up here, pull that thing back a little bit more so we can get back in, right? Like that. All right. This was back, for those that don't know, there's a lot of lines going on. I do apologize there. Let me get rid of all this. This pullback was, guess what, right at the beginning of February into March and April. So we had roughly a month and a half of pain. People wondering that are not on the charts. Where's the bottom? Where's the bottom? Where's the bottom? Where's the bottom? Oh my goodness. Panic sell. My retirement account. Let me jump in. What's going on? That's what you prepare for. You prepare for this so you can get that. All right. But the problem sometimes, or the opportunity, as I like to say, is that when it gets up here, right, no one wants it to pull back because many people don't know what to do up here, right? They don't know what to do up here. So as a long-term investor, i.e. retirement, and I'll talk about my short-term trading in a second of some trades that we'll get to on our respective stocks, but I want everyone to understand this, because when you get up here at the top, the typical question from someone who's just been buying the dip forever, it's very easy to ride the highs, right? So as it does this, that's easy. But what do you do when you get up here? Do you take some profits? Do you want it to pull back and give back some gains so you can buy more? Well, Brian, if it pulls back anymore, I don't have much more cash to distribute and deploy. So I don't want it to pull back because I can't buy more, right? So I got to sit through pain while everyone can buy. Very similar to here, right? There were many people that just had to sit through pain because they didn't have the cash which is understandable, to deploy. So you got to sit through pain. So as an investor long term, you've got to be psychologically ready to be able to sit through pain to know that it will recover. So you either say, okay, I'm just not even going to look at that right now. Brian, you're a long-term investor. Whoever your name is, repeat your name right now. You're a long-term investor. You're a long-term investor. Okay, I know there's a lot of pain. I don't even want to peek. Ooh, that's a lot of red, right? You've got to psychologically step away and say, this is temporary, because that's when the wealth gap is created. If you do have cash to deploy, meaning, hey, I'm actually late to the game. I'm actually, new to the game, right? I don't have a lot of, low average costs. This is my first time jumping in. Then you want to be praying for pain, right? Your kids, for those that have kids, grandchildren, or, a family friend or someone like that, you're like, you want to wait for a bear market. You want to wait for this thing to pull back. You want to give 10% pullbacks. You want everyone to be panicking. And then they're like, ooh, that's the time to invest? Yes. In quality blue chip companies, and also the overall S&P 500, QQQ, and our small cap companies in IWM. That's what you want. All right. Does that resonate with everybody? Fives. We're good. Most people can conceptualize this. It's not a complex thing, right? But you've got to understand it from my side on the teaching and education point. When you get questions or thoughts and everyone's on their high horse, but no one has a plan for when things go negative, right? You need to know what to do then. What am I going to buy if Meta keeps dropping? What am I going to buy if Tesla keeps dropping? What level am I going to buy if Netflix keep going down? Am I still a believer in that company? Do I still believe in the stock market if things get painful? Right? So that is what in my opinion, the experienced investors / traders, that's their mindset. It is a complete opposite dynamic when we think, and I'm not saying I'm perfect. I have experienced folks on here as well. My hat is always risk assessed. So if I see it's been running and it can continue to run, if I see this market go up from last April up almost 60%, and we haven't had a 10%, really 20% retracement from there, that would be roughly around 612 on the SPY. Okay. Let me do it this way. If we go up to 700 there, if I even put it up to 705, that would be roughly back down into 618, 620. So it would look something like this. Okay. So until it happens, I'm not saying it's going to happen tomorrow. I'm not saying it's going to happen next week. I'm just saying that when that happens, I already know what to do. I'm not shocked. I'm like, ooh, thank you, market. Thank you, Trump. Thank you, whoever. There's our opportunity. What do you think folks were doing back here? Because I think like a hedge fund. If I'm a hedge fund and I'm working in cahoots, right? In whatever way they work in cahoots, right? If any politician is listening to me or whoever, if I'm working in cahoots, it's not manipulative. I'm saying I want to take my profits. I've had enough. I've had a great year, great 3-year run, great 4-year run. I want to drop the market more so I can get back in at a dip and get the solid companies that are going to be the future of AI and tech and so on. I want to re-up, i.e. Meta. Do not send it to $1,000 right now. Pull it all the way back to 500, then send it to 1,000. Microsoft. Okay. Do not send that to 600, 700, 800 right now. Double top right there. Pull it all the way back to 300. Let everyone feel the pain up there. And then we have the cash flow to reel it back up. And those that can withstand the pain will join us. Those that will not stand the pain and bought the highs will sell out. See? We good? There's Netflix. Those that bought Netflix on this straight up move right here to 134, okay, did not wait for the pullback, Cool. Let them feel the pain that have an average cost of $121 after the stock split. Okay. Let them feel the pain as much as possible. See who's a real investor. See who really believes in the company. Let it pull all the way back to $50, $70, whatever it might be. And then we run it up to 200 over the next year, 2 years, 3 years, 5 years. All right. How many people remember Meta when it dropped from $380 to $80? That is some serious bear market pain, right? Or anyone who bought this uptrend right here continuously with a straight up move over time without any retracement that's significant enough, let them feel the pain all the way back down here and sell out and sell out and sell out and sell out. And Mark Zuckerberg is an idiot. He doesn't know what he's doing. He's in the news. He's in trial. He's going to jail, blah, 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 blah. And then he comes back, lays off everybody, which is a big time move for a company. And I was talking to someone today about that, saying, did you know that this was someone who was a beginner? Okay. Someone that didn't know. Did you know all these layoffs? It's actually a good thing for these tech companies. And they literally had no idea. Like, what does that mean? What do you mean? That's hurting other people. I get it, but we're in a capitalistic society. So if a big tech company needs to lower their balance sheet to increase their profits so you can use their product more and they can still keep the product alive, they will cut you. Why do you think Google? Remember all those Google layoffs? What did Google do after all the layoffs? Straight shot. They increased their AI spending. They went back and produced more. Right? Gemini, everything that the consumer uses that they love, and you keep your Google searches alive. Right? But unfortunately, who had to pay the price? The employees who got laid off. So in 2026, if you are new or you're new to myself or you are really enjoying this content, I just wanted to pour in it because the market's not open today. So I'm treating this a little bit, tomorrow, I'm treating this a little bit more inspirational, educational, because we got another day to react. Make sure that you're on the right side of the investor mindset versus the corporate employee mindset. And that does not mean don't get a job. That doesn't mean that your job isn't good. That doesn't mean any of that. It just means know what you're in and know how to play the game. Right? So let's jump into the moves, levels. So everybody ready for their levels? Let's go. Give me another 5 in the chat if everybody's good. 5s in the chat. Is this good thus far? We all good? Still good? Still good? Then I'll read the chat and make sure everybody is getting their questions answered. So if you have any specific stocks you want me to chart out or any questions that you want me to cover really quick, you can just generally put it in the chat if you want to. All right. So levels on SPY. We're in a chop zone here, channel. Okay. We got 695 at the top of the channel. We got a midpoint of 694. That I like a little bit better. So that 694, I'll draw the zone here. As long as we're underneath 694, 695, count that as a big resistance supply level. That means it's pumping up, rejecting, pumping up, rejecting, pumping up, rejecting. You can see what it did on Friday and Thursday, rolled over. As you've been listening to the videos, hopefully you took advantage of those positions, pumping, gapping up, coming back down, pumping, potentially gapping up, coming back down until we break out of this range. Okay. So what you would want to see on SPY to take it to the upside confidently is, in my opinion, back above 697. Okay. Above 697. If you want to get early into it, above 696, if we see a candle like this, if you're on the charts or you turn on notifications and you're just a person that looks at price, turn on your notifications, SPY above 697. That is where you're going to start seeing that press, and there must be some positive news coming out, right? Either there was a good Supreme Court ruling. They finally came out and said, hey, Trump tariffs or whatever, good, whatever they say. Okay. Pump the market. Okay. We're going to 700. Okay. So turn your notifications on that. As long as we're below that 694, in my opinion, this is a little bit more of the, how would I say this? The probable scenario. Okay. There's a possibility and there's probability. Okay. So the possible and probable state, in my opinion, is to the downside. Because from my experience, this is looking more like a head and shoulders trap. And we press on that yellow line a little bit more and we try to take it out. Well, Brian, why is that? Where's your another confluence? That can't be enough. Okay, well, how many people have watched my gap fill video? Okay, so do you see this gap that was unfilled? And it took, roughly a week for it to gap up, and it tried right there. And the gap is this light gray area. Okay. So if we break that level, that candle is coming back down into 683 and 680. So you want to have a range as far as this potentially if we do break. Okay. So your midpoint level, ideally underneath 686. Okay. You see it bounced right here underneath 687. So I'd probably want to put it a little bit further underneath 686. Okay. And that would be roughly right there. Okay. If we break underneath 686, just know that there's a gap fill. We're most likely going down to 683, first pit stop, and then maybe press down into that 680. Okay. Okay, Brian, that's not enough. Here's another confluence. We've got a Fibonacci retracement here. Okay. Fibonacci, who? I have a video on the channel about that. Here's a fib. The 38.2 is sitting right there at 690. Excuse me, 680. Go watch that video if you don't know what I'm talking about. Okay. 38.2, 61.8. Look exactly where it bounced. Buyer stepped right there, held that 61.8. There's a gap. The next stage would be down into this golden pocket area right there. 100% retracement would be all the way back down to 670. And it would look something like that. Okay. So there are your three confluences. I don't just tell you stuff without any backup of why. All right. So if you've been watching the videos for long enough, you're like, dang, like this stuff is actually playing out that he's talking about. Yeah, I'm not always right, but I at least like to have three confluences of my opinion, right? / research. Okay. QQQ. Okay. Tech has been pulling back a little bit here. QQQ, you really need to get above 630. Okay. I'm not even playing around with 629, 628, it pumping up into there and you think it's going to break out. It really needs to get above 630, right? I need to see a candle somewhere like that on like a daily or a 4-hour chart, meaning a higher time frame. I need to see a daily close or a 4-hour close, somewhere like that. Okay. Not a wick. You see, this used to be a solid green candle, right? For those that don't know how the candles move, this used to be a solid green candle. It came up like this, wicked, turned around, and turned red. That's how that candle moved. Okay. So that shows that sellers are still up here and trapping buyers that want to chase. They're not going to make it easy to break out. Okay. So what do I say in my videos? They got to gather up more troops. Okay. Gather up more troops, meaning bring it back down to get more buyers so they can ramp it wherever they need to go. If they need to bring it back down to 610 and 612, if they need to bring it all the way back down to the high 590s, whatever they got to do to get up more buyers, very similar to here, drag it all the way down, gather up more buyers so they can ramp it higher, drag it all the way down. You see the volatility is very, very wide. Okay. So QQQ, your line in the sand, in my opinion, needs to be underneath this low right here. So underneath 613, I mean, that's a technical break of trend. Okay. If it gets underneath that level right there, that would be a new lower low. And it would look something like that. And that would technically break this uptrend. Okay. So put it underneath 613. That will give you enough room. I know there's some buyers sitting right there, but look at that yellow line when it gets underneath that 613, 612. Some traders, maybe you have a different level. You're like, Brian, I think it's 614.50 or 615. I like to have ranges and I'm a price action trader. Okay. So I don't have a very specific level if it breaks 614, because look what happens. You got to give it a little bit of room. Well, he said if it breaks 614, take it down for puts. And then I got wicked back all the way up. Yeah, because it needs to, you got to really see, is it really weak or is it approaching there and then it's going to do something like that? Okay. And that's the market that we're in. If you can trade this type of market, especially if you are new to trading within the last year or so, and you're really trying to get it. I know some traders right now, a lot of you have, begin to inquire about one-on-one coaching, mentorship, which I know a lot of people don't do, or I've heard they don't do. I do that. So people are wondering, like, I've been trading for 3 years and 4 years, and I'm still trying to like get my strategy together, or I'm trying to read price action, or I'm trying to like really get this thing. All right. Then that's what you're going to have to do, is just read what type of market we're in and let it break and take it down, or bounce and trust it and keep your stop loss tight. Okay. So there's your level there. Mark it on your charts. If you want to mimic, all I'm doing is looking left and seeing where the big momentum sellers stepped in. And if I look here, it's above those twin peaks, post Nvidia earnings, and also the December tariffs. Excuse me, October tariffs. I'm sorry. Look what it did when it got below that 612. Look what it did when it got below that 612. Confidently. There's really nothing. And the reason it'll flush like that or go lower is probably a catalyst. So it's not just going to go lower because bulls still have control. Okay, let's just be real. All right, bulls still have a lot of control up here, holding the market up. So if we get that, it will probably be a catalyst. It will be Trump coming out saying something about some tariffs. It will be the Supreme Court ruling. They will say something. It will be the Iran war. We bombed something. Like it'll be something like that. Okay. So trust that we're still bullish. We're still going higher. But if something does come out, just know that's the possibility. Okay, we're good. And we also have a gap fill down there to 600. So that will be your bottom end level, would be ultimately 600. Okay. If you want to move it to like a range, 602, 603, but in this range right here. Okay. Let's turn on the daily moving averages really quick and see where those are. The confluence is there. Okay. The daily 100 sitting right there around 606, 607. You can see it's pressing down on that daily 20. And then right there at that 615 is the last line of defense underneath that daily 50. And we typically will press right down into that next moving average. Okay. SPY, you can see, is significantly holding above the daily 20 and daily 50. And where did I mark my levels below? That's sitting right there at that daily 50 at 680. So where's the breakdown? Underneath that 686. And then you would go to the next moving average, which would be roughly 680. Oh, look, where's that 670? Right at that daily 100. So you can use the moving averages as well to understand where support, resistance, weakness, strength is. Okay. As long as we're above, still strong, but still have to watch it. Okay. Let me show you a perfect example as I transition into specific stocks here. Let me look at Palantir, because I had a great question from Trent on Friday in our live trading session. Brian, what do you think about Palantir? It looks like it's going to go higher and fill this gap up here, and it's going to be strong, right? I gave him an idea. I said, I don't like the price action around that area. He took some calls, but he scalped it very quickly. So shout out to Trent. But ultimately, I didn't like that we had all this selling pressure, a lower high, a big wick right there, and we were wicking right at that 182. And it was also right underneath all of these moving average stacks. Okay, so you see that stack right there is trying to decide who has control. So it's a battle zone, right? And ultimately, where do we reject? Right at that daily 20, bam, right off of it. Gave it some juice, okay? I talk about it. I give another analogy for those that are new or those that have heard it and are trying to get my lingo. I look at these moving averages as like a surfer, like a wave, okay? Right? As long as it's above the moving average on a daily chart, we show strength. So the more moving averages it gets above, there, we can start building momentum, okay? When it starts getting below the moving averages, it acts like a submerged, like, you know, you're submerged underneath a wave, or a surfer falls off his surfboard and is underneath the wave, right? It's submerged for right now, but eventually what do solid companies / a solid surfer do? They get back on their board and get back on the next wave, right? So right now, Palantir, if people are asking, it is short-term weakness, right? But it's trying to gather up more troops, right? Because it's not below the daily 200, right? See this big fall right here, this big pullback right there. It started finding some buyers at 150. There's a little bit of buyers sitting right at 170, okay, right where it's sitting now. So you just have to react, right? Right now, it's short-term weakness, okay? So you have to see a little bit more strength, right, for Palantir to recover in a very short-term way. So if you're like, man, I really want Palantir to bounce today, that's a hope and a prayer, right? Because it's not above the moving average. It's got to get back above 183, ideally, to get back above all these moving average stacks. Then it can start building some serious strength and momentum. Well, guess what? What might be a catalyst of that? Earnings. When's earnings? 2-2. So what do you think Palantir is potentially trying to do? Because their balance sheet is still very good, even though people are saying it's overpriced. Yeah, in my opinion, it is a little bit overpriced. So what are they doing? They're bringing it back down before earnings to maybe even out the playing field for their earnings per share. Because I don't project Palantir is going to miss on revenue. You get me? People may talk about their PE ratio, their price to earnings ratio. So what do solid companies do leading up to their earnings? Sometimes they can go lower on earnings, but if a solid company is pulling back before their earnings and you believe in that company, that is an opportunity. Get me? Okay. For those that are experienced, those that know what I'm talking about, put it down in the chat. Like, Brian, like you're hitting the nail on the head. Just help me out a little bit here if y'all know what I'm talking about. If you don't, and you're kind of getting it, hopefully you're learning. Like, this is game that just been given out, okay? Because they don't want us to know this stuff. Why is Palantir pulling back? What's going on? Well, it's been running for how long? Look at the straight up move, right? So it might have one more pop, in my opinion, but it has developed on a monthly time frame some lower highs. So all it's doing right here is consolidating, right? It's consolidating, waiting on the next move, right? So cool. Now, I do think if Palantir pops on earnings one more time and we get new highs, I think for anyone on Palantir, when we were getting in down here, right, $30, $20, $50, I do think one more time on Palantir, if we can get that pop, not financial advice, maybe a suggestion, trimming a little bit. Just a suggestion, okay? Just a suggestion, all right? Cool. Let's jump into Apple and go down our core list here. Apple, I think, is coming into an awesome opportunity leading into earnings season as well, okay? Apple did run extremely, well into its earnings, pull back into its earnings here. You can see right there on last July. I'm sorry. Last July, it was pulling back significantly. Apple pulled back into their earnings season here, roughly 30%, and then there, roughly 25%. Okay. So before their earnings season, their big pop into new highs, Apple pulled back. Isn't that ironic that it was right before this earnings? So you see, Apple last year at this time was pulling back, right? Pulled back all the way to 218, 220, had a little bit of a run into earnings. Cool. Good earnings there. And then ultimately pulled back even further with that big kind of tariff news from 2025. And we got a deeper pullback on Apple. But that does not mean Apple had bad earnings, right? They were ramping up to do what? iPhone release, the biggest iPhone kind of sales, I think, recently, right? All their new products, right? Apple joining the AI race, and everyone was counting Apple out. And guess what Apple did? Started finally running into how many earnings? 1, 2, 3 earnings reports running back up. So if we can get that repeat on a pullback into their earnings, and then we pop on earnings, I think Apple, if we can pull back into the lower 215s, 220s, and we can get that deeper pullback on Apple, that will be another opportunity to take Apple to $300 plus. All right. So that's what it looks like. It's the short-term pain for the long-term gain. Okay. So Apple in the short term, it is underneath all the daily moving average stacks. That helps us identify that Apple is weak in the short term. It had a quote unquote death cross, as people call it in the trading technical space. It had a cross of the daily 20, right? That is a death cross, quote unquote. It is underneath the daily 100. The next moving average, the daily 200, is all the way down here into 234, 240. So that would be my ultimate kind of target all the way back down there if it does get any weaker. Okay. But in my opinion, Apple is going to have a pit stop most likely around this zone of 250 where it could recover and bounce and go back up to 270. But please pay attention to the moving averages because this is what kind of caught people, in my opinion, on Meta. Guess what Meta did? It bounced at 600, but if you didn't have a chart in front of you, it did not get above all the moving average stacks, was the final defense, went up here. And y'all remember when I was telling you that I think Meta has a little bit lower? Pick up the dip. Don't try to time it. But if you're trading, I think Meta is still fairly weak. Bam, right into the moving average, right below all of them, back down. There you go. And then now people are pissed. Oh my gosh, I had long-term leaps on Meta and I'm all the way back. Just throw your hands up in the air. So Meta's coming into a big term right here, which is going to be their earnings. Can it pop off this double bottom of 600 and pop like this? There's a possibility for that. All right. So there's very different ways to understand how and where the actual supports are, which are going to be the moving averages, where the strength is. And also typically you don't get a V bottom off the lows and just never pull back. Okay. And that just takes time for people to understand that. It took me time to understand that I need to see consolidation down here. I need to see a retest down here to see if that's truly a support, right? It needs to come back, show me strength, and then curl back up and see if that's actually going to be where buyers want to step up. If not, bam, right through it. We're going to the next level. Okay. Am I speaking truth to anybody that's understanding this? Because when I say it, you're like, dang, I thought Meta, it was that time for Meta. Dang, why does Apple keep dipping lower? Because it's below the moving average stacks for right now. Okay. That shows short-term weakness. It will help you as a long-term investor more specifically, especially for those people that are looking for the best buy opportunities on these companies. And you don't buy at the wrong time, waiting in pain, and you get the best entries, the best prices. Okay. Google. Now, what happens when you get Google all the way above the moving averages so dramatically? Okay. What's the age old saying? You ride the wave while they're high, but the biggest players in the game, let's not talk about the NFL season this year. Okay. The biggest players in the game eventually got to pull back. Right. So don't get so high horsed up here that is just riding the moving averages so high that it eventually won't break the moving averages. They come out with some negative news on Google and Google pulls all the way back to the daily 200. Very similar to what they did on Netflix. Very similar to what they're doing on Apple. Very similar to what they did on Hood. Right? Very similar to what they did on Meta. It will happen, and that's what we call rotation. So they're rotating money from all the Google profits. We'll release some news saying something happened, something's wrong with Gemini, blah, blah, blah. We got some loss, whatever they put out. Okay. And the funny thing is you don't know when that is going to happen. But the charts tell us that eventually it does have to pull back. Okay. So the farther they rise or the quicker they rise, they can equally fall just as fast or faster. Where's the staircase up or elevator up in this case, elevator back down. So Google, in my opinion, could pull all the way back down to the low 200s. Right? Well, why you say that, Dr. B? Why you say that? It's because if I'm following my chart structures, eventually, I'm not saying tomorrow, whenever, but if we're following chart structures, did Google ever really retest this 210 level that it broke out? What do you mean? When you break a key resistance, specifically on a weekly or a monthly chart, okay, ideally that level will come back and retest at some point in time. Okay, whether it's a bear market, whether they have some AI bubble stuff, whatever it is, it does not mean the company is going to go out of business. It doesn't mean it's bad. It just means, oh, that's just a technical retest. That is an opportunity right there. It was at 340 and back down to 200. Let's look at Oracle. Oh man, look exactly where Oracle retested after Oracle pumped to 340 and everyone was talking about Oracle, AI deal, open AI. Okay, cool. Pull back and retest there because you never really retested this breakout point. Where did it really break out? It really broke out right here, 175. Where is it retesting? 175. My goodness, it's a Sunday, and I'm going to give myself some kudos here for preaching because I hope somebody is getting some value from this. Okay. Does that make sense for everybody? So when you know this, you're more patient for the companies that you see everyone making money on and you missed the boat. Because you know eventually those people are going to get greedy and not ever take any profits, not know what to do with the highs, not know when that company is going to eventually pull back. There's going to be rotation in the sectors and they don't have any cash because they've sold out of all their profits at a loss because they did not trim any profits or they did not prepare for the fall to buy more. It's a cycle that's been inevitable for years. Now, the baby boomer, the old school investor, the Warren Buffett type of investor will say, just buy and hold. Yes, that is the truth. Buy and hold solid companies, 5 years plus, 10 years plus, and you'll be just fine. But if you've noticed, we're in a different type of era. There's not a lot of disposable income for many people out there, which is why they're like, I don't have any money to buy stock. I got to buy groceries. I got more kids. I've got to pay off debt, right? So if the market does fall, who benefits? Asset holders, folks that are lowering their expenses, or folks that are preparing for those things to happen. So baby boomers, 80s, 90s, many of us have lived through it. There was a little bit of extra money. Stuff didn't cost so much. Hey, I got an extra $1,000 to put up on. I got an extra couple grand. I got an extra 10 grand throw over here. I don't need that for anything. So I'm taking that into account, that who is going to win in the next pullback, right? Let me check the chat. Everybody good. Enlightening. Beautiful. That's what I love. Do you do futures? ES? Yes, I do. Cool. All right, I'm gonna answer some questions. Believe SoFi will be $100 company? Yes, SoFi will be $100+ in my opinion. And when it does, everyone will be positioned. Cool. Finally caught a live stream. Let's go. Love it. Love it. Love it. All right, we're approaching that hour mark here roughly. So I want to get into specific stocks that I believe this week can be good trading opportunities. So I'll give some trade ideas. Okay, since it's a shortened week, I personally love trading NVIDIA. For those in our live trading group, you know I love gaps. Okay, and gaps are very clear when they're close to gaps like this on NVIDIA. I think personally those gaps will get filled. So if NVIDIA, as long as it's below this 190, 189 level, we were taking this trade all week. We did take some calls off 180, but this trade over the last couple of days was some money makers. It also was frustrating at the same time, but this was a beautiful, easy trade off of this 190. And we took puts off 190, made 170+%. Other community members made 50, 100+%. And this was an easy put off of resistance, rejected there, and wanted to pull back through this gap fill right here. Okay. So I will be looking for that in the short term. So this will be a day trade, scalp, whatever. If the market pulls back, NVIDIA could pull back to that kind of 183. And then ultimately, if it wants 180, and then we got another gap down here if it wants lower than that. Okay. So watch out for NVIDIA, maybe a short little scalp right there through that gap fill. It's very, very close. If I look on the daily moving average stacks, it's looking kind of like Palantir did. Okay. So it was stacked up around here and eventually it will make a move off of here, whether it fills that gap like this and then holds that 183 and bounces. I don't think it's going to make a big move personally before earnings. Okay. NVIDIA has had a little bit of negative sentiment around the China chips, right, being forbidden in China, whatever they're saying, okay? I don't get into the weeds. I just know that, hey, if you're not letting NVIDIA do their business over there, so on and so forth, that's not a good thing, okay, in the short term. So if they do have that sentiment around them in the short term, I believe NVIDIA, right, potentially could accelerate through those moving average stacks and start accelerating like that, kind of like what Palantir did. Let me show you that chart again, okay? See that? Didn't that look very similar? was sitting right around this zone and then bam, right through it. Okay. So I am looking for NVIDIA puts again this week in live trading this week. We will definitely be one of our top quality setups that should be pretty easy on a shortened week because we're very comfortable with it. It doesn't have too wide of ranges, right? We can control a little bit more. So there's a quality setup that I will be looking for. Same thing with AMD, which had a major run. Okay. V bottomed off the lows. Okay, V bottom off the lows, bam. That's what a V bottom looks like. It just immediately gap up, run, and it has liquidity at the top here, i.e. a very solid resistance level at 240 and 235. You see what happens when it ran back up to there so quickly, knocked back down, and there's gaps. Okay, so if we have negative tariff news, what do you think affects negative tariff news? Semiconductors, chips. So that's why for me this week, the semiconductor sector will be on high watch to see if there's any negative sentiment. I've got easy gap fills back down for a couple of companies in the semiconductor sector. Okay. So AMD, NVIDIA can kind of work in tandem. I know it's been very strong, but remember when I told you about that Amazon in the last couple of weeks? It's like, dang, like Amazon's so strong and it's popping and it ran. What did it do? Pulled back. Okay. So if you weren't a part of the big grind, it does not mean that it's going to do the same thing the next week. So when you're about to get in, it could be the pullback week. And then you're not prepared for puts, or you're not patient for where it's pulling back to. So if you miss this, patience, or learn how to trade puts. If it's pulling back, prepare in your solid zones to rotate it back up. All right. So those are two solid setups. I'm looking for NVIDIA and AMD just because I love gaps and they are very close to their gaps. And I know that they have very solid daily resistance, right? And weekly resistance right there at AMD, And then if it breaks below the previous day lows, 227, I'm taking it down for puts. Okay. NVIDIA, I can trust it. I have been trusting in this 190, 189 level, big, massive, right? And then ultimately needs to build up more troops. Again, massive there. Okay. So this will be a short scalp. I'll hold runners or continuation if it gets underneath 183, because that's underneath that 100 moving average. And then we'll have a flush down into 180 and then maybe taking it out. All right. And this will all be reactionary when the market opens on Tuesday, depending on what we do. We could already be down there. Just say we have some negative news or whatever, and it's already gapped down here. It's already down there. Then I got to change my plan. Okay. MU in the semiconductor sector has been the strongest semiconductor to this time. Everyone's been rotating their money over into MU. I remember talking about MU at $100, right? When we were, so I think someone asked in the trading group, what do you think about MU? I was like, well, it looks like a bull flag to me. And then it just took an NVIDIA run. All right. So MU eventually's got to pull back. You see, the further it gets away from the moving average stacks, it shows extreme strength, but also the further it gets away, it's got to come back and retest them. So eventually MU will give that just deathly candle straight back down, kind of like what it did here, 260, retested the moving averages. It got a little bit too far away from them. So I would look at that maybe back closer to 320, 310, and then low liquidity here. You got 300, nice psych level there. Okay, so wherever it decides to get exhausted, it'll eventually pull back. But right now, just a lot of strength with MU. I'd be careful on shorting that personally until we get confirmation. Qualcomm, okay, in the semiconductor sector, I'll stay with that. Qualcomm is one that I've got my eye on leading into their earnings, because instead of running with the remainder of the semiconductors, Qualcomm is pulling back into a decent support. So as much as people think that I love puts and I'm always looking at downside, I want things like this. That's when I get interested in saying, what's going on with them? Let me see if this is opportunity or not. Let me see if it's approaching this big, massive weekly support level here. It's had good news. It had good previous earnings. There's really no reasoning why it's pulling back other than some fluff news. And then I need to see if it holds from a technical standpoint. So I would look at Qualcomm down into 150, right? And then ultimately, if it flushes a little bit lower, then cool. But 150 is that level, and it's very close to that, about $10 off of there. So 150 would be kind of that level that I would maybe take a look at, very similar to how it was moving here, 173 all the way back down to 150, and then took a V bottom bounce and just absolutely ripped to 200. Okay. So Qualcomm looking at the opportunity back to the upside leading in their earnings. So that's one that I would look at that has a good risk to reward back to the upside for calls. Oracle, a lot of questions here. I think it's just consolidating. I mean, I would say when you're uncertain, shares are the best. Shares and leaps when you're uncertain. When you think Oracle, and I do believe Oracle is a great opportunity underneath $200. I think some people would agree, like, Brian, this is going back all the way at 300. Like, pick up as many as you can. Yeah, but I also like to confirm it on the chart. So it's kind of sitting here in this 190 support, maybe an inverse head and shoulders, maybe a basing here. Who knows? It could go lower, but the safety would be dollar cost averaging in the shares or grabbing leaps if you have the funds to do so, because it could pop at any time and then you want to be a part of it in some way. But trying to predict, just like people were looking here, like, oh man, Oracle's popping, it's going. Well, it's still below the moving average stacks. You just traded calls right into the daily 50. Are you getting me? So even though there's a gap right here, that's another layer of understanding the charts and understanding the markets, that we're still below this cross, right? It's got to start stacking above many of them and closing above there, and then you can build strength. Core weave. See the difference there? Core weave is building some rotational strength above the daily 50, closing above it, holding above it, and then also getting above slightly the daily 100, right up into it. So as long as core weave can hold above 92, and if you want to put 90, then it can rotate higher back to mid 100s. All right. So that helps a little bit, hopefully, for those that are looking. All right. So you've got my day trade setups for this week. I'm NVIDIA, AMD, not too complicated there. Amazon, I am looking at Amazon back to the upside. I like that it's holding here at 235. That was my retest level that I was mentioning multiple times during these stock sermon Sundays. Amazon back to the upside here. Okay. That could be a break and a retest. Break above, retest here. Guess where it's sitting? Right above those moving average stacks, what could act as a surfer boost and take it up back to retest 248, 250. Okay. So Amazon, more of a really nice bullish setup here. Nice little pin bar candle right there, basing right on the top of that 235, 236 level. If it breaks back above 240 confidently, then you can look for the upside back to maybe rotating back up here to the highs. All right. So Amazon, I like back to the highs in the short term. That'd be more of a bullish setup there. Hood. I really want it. You see how it's below all those daily moving average stacks right there. It's approaching a nice buy level here. I'd love for it to tick down into that 101 to 105 area. But if it doesn't, it could this could be the bounce. This could be the consolidation and starts doing this and then rotating back up. But gets close to that daily 200 moving average right there, which is sitting right at 101, 102. That is a dollar cost averaging zone. If you're looking for shares and you think Hood personally will have max out earnings and pop all the way back to 150 plus, right? I think it's a great opportunity, in my opinion. I think Hood is a $200 plus stock. We called Hood back down here at, underneath $10, $20 in our Discord a couple years ago when everyone was doubting Robinhood and saying it was glitching and all the drama it had during 2020 and blah, 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 right? But now it's got prediction markets. It's got more investors coming on. It's got a credit card, debit card, savings account, Roth IRA. I mean, it's literally, yeah, it's the fintech at this point. Isn't that crazy? Isn't that crazy how one person down and out, and I love their CEO. Love is a strong word, but I like their CEO a lot. I think he's innovative. I think he's got a lot of ideas. I think he's actually listening to his investors and listening to what it actually people want and constantly improving. All right. So Robinhood, great investment in my opinion, not financial advice right there. Dollar cost averaging into 100. If it gets lower than that, it's even better. All right. Starting to wrap up here because I think I tend to speed up towards these analyses, and I want to make sure that I'm answering anyone's specific questions. Okay. Let me go through the chat really quick, answer any questions if you are still on here and listening to your question. Do you do futures? Yes, I do. I think options traders, they make the best futures traders in my opinion, because we have to be a little bit more precise with our entries. So yeah, I'll just answer that. For those that don't know what that is, the futures market is a different way of trading. The financial markets is the future price or the future prediction price of the S&P 500. So ES correlates with SPY, NQ correlates with QQQ, RTY correlates with IWM. So what we can do is we can essentially trade both, right? So SPY actually helps me. So 694, when I say that, if you're a futures trader, that'll be right at ES 7,000. So as long as ES futures are below 7,000, what the heck is going on here? Did we gap down? Oh my goodness. Are you kidding me? Did we gap down? Wow. We're at 6,900. I love when our ideas play out while we are on the actual live here. Oh my goodness. If you don't know what I'm seeing, this is the futures. These are the futures of the S&P 500. And you can see that, remember when I was telling you, hey, I think we can go down to 680 on SPY. Let me look at Robinhood right now. Are we in the after hours session? Are we like at 680? SPY. So we're already at our level. No, 691 and some change. So that means we'll probably be gap down on Tuesday, most likely. But gap down here in the futures market looks like underneath that daily moving average there, it will probably most likely retest that daily moving average, and then, you know, we'll continue lower. So it looks like that 680 is going to be kind of in sight, right? Because we are technically underneath that level there, which on SPY would be right here, 691. So when we wake up in the morning, we'll probably be at 687 or lower. So the futures market helps us as options traders as well trade the market better. So I can trade futures very easily because I know the options market very well. All right. Cool. Yep. Tariffs. There we go. So we're on point. So it looks like it's about to be that's kind of sucks though, because that means that NVIDIA is probably going to be at 180, 183 when we wake up on Tuesday morning. The trade's already going to happen. Should just swung puts. Let's see. What other questions? I'm just looking through the questions right now. If you can see, I apologize. All on your screen. I believe SoFi will be 100. 685 or sell off heavily. Yep. You're absolutely right, Tanvir. Why must they pull back? Ultimately, is it a huge loss for the company? That's a great question, Renee. Okay, I appreciate that if you're still on here. So I'll make it advantageous for everyone that's on here. Why do solid companies have to pull back? Okay, so let's look at Google. Let's look at Google as an example. Okay, if a company is so good, why do they have to pull back? There's a couple of different reasons, and you may have your perspective. If you're, experienced investor or trader, you may have your ideas. But I'll just give some sentiments for maybe the new person. One is a little bit more technical of a term, is our pricing to earnings ratio, or a price to earnings ratio, or our PE ratio. You can go look at ChatGPT or whatever if you're new and just type in PE ratio of Palantir or PE ratio of Google. Right? There is a price. There's the earnings that come out. Okay. I mean, Let me try to make this as simple third grade level as possible. There's earnings that come out each quarter of a company. So earnings have happened 4 times a year. Okay. Each time a company has to beat those earnings and the goalpost continues to move. Right. So what happens is the company continues to grow. If they're a solid company, i.e. Google, you have your NVIDIA, they just keep getting better and better and better and better and better. Eventually that company, they just like, hey, we've got to reset here. I can't keep moving the goalpost, and our price of our stock is getting so far past where our industry / our earnings and the ratio from the price of the stock to the earnings that is happening. Okay. So I know for those that are rewatching, it's like, Brian, that's not it. That's not it. I think about as a teacher, as an educator, I'm trying to talk to the person that doesn't understand this, right? So they're like, okay, that clicks. So what happens is the company resets either by laying off. Negative news comes out. Isn't it ironic that the news comes out right when the chart looks like it's in resistance or it looks like it's about to go? They reset it. If you've heard the term, they're going to reset your money in 2026. They reset the market, bring it back down to even the playing field to allow big money investors to pour back into the company, to redistribute it, right? Allow spending to redistribute. Also allow potential tax write-offs because they are a company as well. If you're a business owner, you know, right? Trying to mitigate taxes, move money around. Okay. They bring the stock back down in some type of way. News, it's getting too far, too extended. They can't keep beating how they're beating. They keep moving the goalpost. They bring it back down. Investors are happy, right? And they continue to have massive earnings beats and they roll it back higher. So the earnings are now matching the actual price of said stock. Okay. So that is why a company just can't go and should not go straight up. Okay. SMCI, for example. Now companies can do that. And it might, if y'all remember the Cisco days, and that's been a thing. Cisco was one of the solid companies, right? So SMCI goes straight up. Okay. That is not how a company should look. You want a company, a solid company, in my opinion, to look like an apple. So I'm on a monthly chart and it pops and rotates and extends and expands. And eventually a bear market comes in, and then you got bear flags forming. Then you got another lower high and higher low forming. Then you got another higher high and expansion, and then another pullback, right? And the big reset comes when those companies break continuous trend. Okay. So for example, let's look at Meta back here. When the company needed a huge reset and Mark Zuckerberg said, hey, this isn't working. We want the metaverse. Remember when he was talking about the metaverse? He was also in the news. So it was a little bit, in my opinion, dramatic. But a company could have the possibility of not just resetting, but actually breaking trend, and it just gets absolutely nasty. They need a full reset, completely rebrand the company. We need to do something completely else. But that's where that company says, hey, we're still the big dog, right? We still have relevance. Has anyone stopped using Instagram? Has anyone stopped using WhatsApp? Has anyone stopped using Facebook, right? Are people stopped spending ads on Facebook? No. More companies are coming onto social. So that makes sense that as people are counting out Meta's, a Tesla, and this is going to be stupid. I knew this social media platform was stupid. No. Meta is, it's a data center. And it's in the AI space. So I don't know if that answers your question, Renee, but I was trying to expound upon it, that companies reset to bring new investors in, to continue to allow the company to grow at a rate that is healthy, right? So it's around for 20, 30, 40, 50, 100 plus years. Company expands too much. They get into much debt too quickly, right? They go up too quickly, right? Whatever it is, they have to do whatever. So For example, I'll do another one. I'm pretty much done, everybody, so you're more than welcome to, ask any final questions. But here's a perfect example: Amazon. Okay, Amazon is a moat. It is revolutionary in Jeff Bezos coming out with Amazon and saying, "Hey, I'm going to develop it for my basement." If you haven't seen the Amazon movie or Bezos, like whatever you feel about him, it is a moat. So because it was a moat, it went up so quickly that for those that remember that have been investing this long, Amazon was $2,000-$3,000. I'm not sure exact number it went up to, but $2,000-$3,000. Okay. I remember trading Amazon when it was around that price. So eventually this company also says, hey, our stock is getting too pricey for the average investor. We got to do a reset, incentivize our current investors / shareholders to do a 10-to-1 stock split or a stock split in general, and allow them to get 10 shares for every 1 share that they own. So anyone who's holding benefits from that, but it also allows the company to reset, bring the price back down to a price that's relative for the new investor to come in and buy. If you see Chipotle at $3,000, which Chipotle was at $3,000, the new investor that goes to Chipotle is not going to spend $2,000. They're going to be like, I'm not investing in that. Right? So they do a stock split, incentivize the long-term holder still to hold their shares, and they bring it back to a reasonable price and say, cool. So some people believe it's a good thing. Some people are like, I don't like it because it doesn't move the same, so on and so forth. Now Chipotle looks like a cheap stock, right? But that's why you have to do your due diligence and know that Chipotle is still one of the cheapest ways to get a bowl and a meal, even though it's not $7-8 anymore, right? So I don't know, Renee, does that answer your question if you're still here? Makes following along very easy. Appreciate you taking the education on a fundamental. Yeah, for sure. For sure. Cool. So if y'all enjoyed this, spread it, maybe tag me, whatever. You're more than welcome to message myself over on our Instagram. I do respond to that. Or you're welcome to, join the community. Whatever it is, if you got questions, if you enjoyed this, man, this is as much as I've learned in a while. I enjoyed it. Let me know so I can continue to do more of it. All right. And Trent's absolutely right. Renee, pullbacks are a part of the markets. It's a breath cycle. It gives the market breathing room, right? And it allows the market to flow naturally in an uptrend over a period of time, right? So I'm not reinventing anything new as I close out here, right? I'm not reinventing the wheel. I'm not trying to do it. I'm just trying to approach to say I have a gift and I'm proud of it to make things simple and also to debunk myths. So if you notice, when someone asks a question, I start off with what people think it is or have known it as, and then reformulate it in a modern way. Well, what about just buy and hold? And what about just buy the dip? Well, then I ask you, where's the dip? Well, I don't know. Just buy it. Okay, well, what if it keeps dipping? Well, just keep buying more. Well, what if you run out of cash? Where are you trying to take it to? How long are you trying to hold it? Well, I don't know, till retirement. Well, what if you have a bear market during your retirement year? I don't know. Then you see what I'm saying? So it's always an expansion of knowledge to understand that we have to be active investors and traders. You can be passive all you want. That's fine. You look up and you're like, dang, I set and forget that. And I'm up 100% my portfolio. Yes, that's fine. But what happened during 2008 that people weren't prepared? Their retirement accounts were set. What happened in 2022 when we had all that bear market season and people were in their retirement years and they essentially had to reset? What about them? That's who I care about. Right? I got family members, I got friends, I got, aunties, uncles that are in those years. And if we have another bear market year, if we have some type of turmoil, if we have something like that, think about your elders. That is not a good thing. It's good for young investors and anyone that has time. So I felt a calling to come in and say, hey, we got to pay attention. Right? So we don't get caught off guard and we're on the right side. 2020 was a wealth transfer, right? Here's 2020. wealth transfer. It pretty much gave all of 2019 gains back. You see this? Here's 2018. Here's 2019. In 1 month, all of the year's gains are back. Whole year. But it was a wealth transfer because over the next 3 years, anyone who bought that dip was higher over time. So if you have been in the markets for 10 years, 20 years, 30 years, 40 years, it's easy for you to say, buy the dip. We're just holding. I've got Apple at X, Y, and Z. But there's new investors coming in every single time. And some of them have never bought a stock at 40, 50 years old. Right? So they're trying to get involved. So I have to speak in that manner. Right? And hopefully you understand that if you're educating your people to say, where do you buy NVIDIA now? Right? So you do dollar cost average right now because projections that NVIDIA will be 300, 400, 500 plus dollars. It'll eventually have a stock split. It's not going anywhere. Jensen is awesome. Right? But we've run pretty quickly, haven't we? Right? So keep dollar cost averaging. That's fine. So we have to find, and specifically in this AI race, really good prices for these specific stocks because they're very volatile, right? Especially the AI stocks, the tech stocks, right? If we look at MP materials, APLD, it went from $20 to $100 in a matter of 2 months. That's not normal. So if you heard MP and you heard someone say buy MP and you bought it $100, you probably sold out because it cut it in 50% in half because it went up so quick. Now it is resetting for another opportunity. Okay. So for my folks that have extra amount of money, for my folks that have an abundance of extra cash on the sideline, for my folks that are long-term investors and say, hey, I'm cool with it. I'm with the ebbs and flows. I'm holding long-term. You're fine. I come on here to say, how can you bring everyone into the game? Not just you, because that's what got us here. The know-it-alls, the folks that said, hey, it's only for the folks that got money. If you ain't got money, you can't participate. You get me? So that's the difference in why I show up now and how it's been growing so quickly is I've been silent for too long, at least about this particular skill set. All right, cool. Did we short the pops yet? Yep. Yep. Short the pops. I'm shorting them pops. Love it, at least for right now. All right, folks. Peace, love, and blessings to you. I will talk to y'all and see y'all in live trading. Pay attention if you didn't hear the beginning of it, that we got some new stuff coming out. We got our merch line that will be probably releasing this week. So a couple of hats, if you like a mug, if you want it'll be a little bit shortened from last time. Okay. Some hoodies, t-shirts, things like that if you want to support. And then as well as a different level. It's going to be called the apprentice level. A lot of you have been asking, hey, do you have a smaller level that I can just get the trade ideas or what you talk about here? Maybe a condensed version, maybe a mini course that can get me started and set up. I can learn before I want to jump into live trading or whatever it might be. All right. So that will be coming out probably at the next Stock Sermon Sunday. All right. So look out for those two new things. I appreciate y'all. And until next time, peace, love, and blessings. All right. Bye-bye.